The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks. I hope y'all are having a great day out there. Let's check out where the markets are at right now, and I got to go over to my tracker here, and we'll see where the markets are at this moment. Got to reset it back up. Had to do a little reinstall on Think or Swim. So there we go. All right. So got most of my markets up here, and it's like we got S&P is up 11 points on the day. Nasdaq is up 30, pushing on a 1.5 deviation level right now. Really pausing right there. Also just hit a magnet on Nasdaq there at 4407. We got over at the Russell. It's up 6.4 points. The Dow is up 114. We got gold down 9 points. We got silver down 0.216. Copper is pretty much flat on the day. Oil's currently down $1.73, so a nice big move. We got natural gas down 0.05, not moving too much off the day there. We got corn is down 5 points, and soybeans is down 7.5. Let's see. Let's go ahead and add these in. We got bonds moving on up 1 1/14 there, so 1.14. And the dollar index is up 0.655. So some nice moves right there on the dollar index. Starting off yesterday, so we got a low at 93.97. We're up to 94.82 right now. So some nice big moves in the dollar index. If I go in and put in some currency pairs, we'll add in euro dollar down 84 pips. We got euro yen is down 42. And euro pound is down 33. Hopping on over to the pound. We got pound dollar down 38. And pound yen up just a mere 3 pips on the day at the moment from yesterday's closing settlement there. And then we can dive on into US yen, which is up 35 pips. We got Aussie yen is currently down 46, with Aussie dollar currently down 61 pips on the day. Hopping on over to the dollar franc. Let's see here if I can type right. Got dollar franc is currently up 59 pips, with the dollar CAD currently being down. If I can get that up. It popped up and then went away. Let's see. You didn't like how I typed that. Let me do it one more time. I think dollar CAD should be up. Let's see here. Yeah, there we go. Dollar CAD up 108 pips on the day. So I guess you caught up on your current market wrap. And with that, let's go ahead and move into some of the top news stories. Jobless claims hovering near 15-year lows. And so boosting the growth outlook for whatever weight you might give them. European shares recovered as bonds eased off. And the euro, as we can see, fell down a bit, down 87 pips right now. Natural gas falling as the supply rises 76 billion cubic feet. And we got, let's see, we got natural gas. I know I had that in there somewhere. Here we go. So it's barely off those lows right now, so bouncing on back up. Looking at NYMEX falling back under $60 a barrel on NYMEX crude, and sitting at 59.18 at the moment. Earlier this morning, your dollar dropped further on the data that came out. And let's see here let's see. And then, some big things on the Swiss franc boom being, just some headline reports. Let's go ahead and dive in, and let's check out a few of our charts. Going right here, and we'll update this to a little easier to view format for you. And let me see, where do I got that one hidden at? I always got to search for it and find it. I got way too many templates in here. Let's see. There we go. TFNN. All right. So it makes the font a little bit larger for you. Makes it a little easier to see. And we'll go through a few trade. Look at natural gas. We'll look at oil, and just put all the different pieces together. And then one thing. Let's just turn all this off. Okay. There we go. And let's pop that on over to 10-minute charts once that loads up. And when it loads up, we'll review those, and we'll also go through the news along with it. But we got a 10 minutes right here. And looking at the euro dollar and its impact that it's had on some of the news that has come out lately. And we see it, opened right up, tried to do a little pop-up, but right here in the U.S. session as the U.S. news came out, kept dropping down, was dropping down a little bit really before that U.S. news, but it makes for a good headline, I guess. And let me widen it out. There you go. You can see those bars a little bit better. And we moved on down to where? To one deviation right there. Boom, hit it. Bounced right off of it, seeing oscillations right at the 0.5, the 0.7, and down at the 1. So really having to break through those before we got that next move down. And as you can see, like it broke the low here, came back up, broke it again, then it moved on down to 0.7. Bounced up off of that, broke the low of that, moved on down to one deviation, and then popped on back up without breaking it. And most of the time, as you can see on like the 0.7 to 0.5 or the 1 to 0.7, we're seeing those moves right back to that same deviation level. Even happening on natural gas right now, we're seeing it move on back down to the 0.5 deviation, or Nasdaq moving on down to the 0.5 deviation at the moment. And let's pull on Nasdaq on up. We'll look at that and talk about it a little bit. Go through and do some chart reviews. And we'll look at oil, we'll look at natural gas, and put some of the different pieces together for you. So Nasdaq had a big, strong move down, moved all the way up to 1.5 deviations, and from a low to a high perspective, but bounced right on up there, as you can see, came down, fell to break that low, bounced right on back up, didn't break the high, waiting on it. As soon as it broke that high, look what happened. It went right back up to settlement. Hit settlement, pulled down. Once it broke that high, moved on up to 0.5. Pulled on back down. Once it broke back up, then we see it move on back on up to 0.7. So, just some nice clean shots. It looks like it might be one day. It's already moved back into the 0.5 deviation zone. We'll see if it's going to be able to hold that and keep going, or if it's going to go ahead and retrace at least to its 0.5 level from there. And that gets us caught up on the Nasdaq, but it's some really nice, good trend trades this morning. Just trading that with some other traders. We had some good trades that fired off. Looking on over into natural gas. So let me pull that up right here. And might be about time to roll that one over too. Pretty soon. And yeah, it looks like I am behind on rolling that over. So give me 1 second. We'll move it. So let's go to Tools, Instrument Manager, and if you're using, say, NinjaTrader. And once you pull it up, it's pretty simple. Just scroll on down to natural gas, and then right click and left click. And then while you're here, of course, you can check everything else out in the process, make sure it all looks like it's up to date. All right. So now that I've done that, let me close that out. Taking itself a few minutes to do that. Got a lot of different charts loaded. And let's roll this back into the new natural gas contract now. And there we go, right into 615. Be a little bit cleaner and don't have all that chop going on. All that space. There we go. That's what I'm looking for. And so you can sort of see without having to, be super bright to figure out where the announcement came out. It actually had a nice little run up, pulled back off of that run up, and then just broke way down. And nice move there, 0.5 to 0.5, then oscillating right in that area with a 1 deviation move. So good move there on natural gas based on the inventory report today. And then let's check out one more look at today and yesterday here on oil. So as oil's been moving around, had its inventory report came out yesterday. And Also, natural gas and oil can set up for some pretty cool strangle setups over on Nadex binary contracts. But anyway, so we saw a little run up, and then this morning it just trended, and I mean, you just don't get a smoother trend, just down, 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 down. And then where does it start hesitating? Right at 1 at deviation. Looks like it might even want to move down to 1.5 at the moment. So just now breaking the low there of that 1 deviation move with a solid down close there. So sitting at this point right here, oil, pretty exhausted. It's going to be hard to get much more movement out of it. I'd be pretty much putting oil up for the day. So just be a little harder to read at this point. But, man, this morning was just a perfect time to be trading it, as it just was a beautiful, smooth run. Looking at it yesterday, seeing where the inventory report came on out, going on over here. And right there at 10:30, you go in right before that, you put a strangle on to buy and sell. And I don't care which way you win it, it got both. And so you may have taken profit on both sides, but you at least had to take profit on one side of the trade as it moved down to close pretty low, right on down here at, let's see, 11 o'clock. So right there, we got a nice solid half deviation up and, 0.3 deviation down, half deviation up move. And if you chose the 12 o'clock, then you even did better because the thing just flew and kept going. After rising on up to 1 deviation before the report came out yesterday, flew on all the way back down to settlement before it was said and done. So there's some nice, clear, clean moves. Lots of ways to trade deviations, but they just give you an idea of where to expect hesitation and movement. And, I mean, you can see it right here. I mean, even with the report coming out, boom, it hits 0.7, bounces off that, hits 0.5, stops, hesitates, bounces there, and then comes on down to settlement right there and just chills out for a while. So knowing where those are at and then looking for the, significant breakouts of those, obviously combining them with magnets can help greatly in that process of, what to look for next. An example here of a magnet on this trade, if you're looking for a reversal, is we got this nice big volume bar right over here. So we could be looking at a move on back up. When it does decide to break on back up, we could be looking at a move that high. That's a larger than normal volume bar, of course. But you can go through and you can literally just chart out all the high volume bars and use those to help you out with your magnets. And sort of like I've shown on the shows in the past, and I've also a lot of that from Tommy O'Brien's book, and he really covers magnets quite a bit in there on a daily basis. I love using them on an intraday basis as well in my own trading. Things coming up. The Vegas Money Show is coming up next week. And so I look forward to heading out there. And we'll talk a little about that when we get back. Y'all stay tuned.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, welcome back here to the Diagnostic Trading Hour. And so let's see here. I'm going in and pulling this up and looking at what we got. Okay, so we got the Vegas Money Show is coming on up. So let's go in and pull that. I'll show you where it's at. Always a fun time, of course. And let's see here. Money Show upcoming events. And we got it going on at Caesar's Palace this year. And be a lot of traders out there. I go out there mainly just to hang out and talk to traders I know. And it's a lot more fun than worrying about having to stand at a booth for 8 or 12 hours. But anyways, if you're going to be out there, let me know. But have a lot of fun out there. And, you know, there's a few guys I'll check them out, listen to them, see what they got, see if I can pick up any golden nuggets of wisdom. And, you know, check out the shows and, of course, you know, have a little fun at the tables while I'm at it. So look forward to hopefully seeing some of you out there. And, again, that's coming up this weekend or this, I guess, Saturday, Monday. So, we'll find out Sunday. So I guess it starts on Monday through Thursday because they have like a big option thing starting up before that. We're going to go into news, but first I want to talk a little bit about spreads for you. And some new change that is coming to Nadex on the spread, something I've been fighting for a long time. And so let's just go down here and look at these spreads and see how they're working now. And let's see, they got them now in demo. Let's see about live, and they got them in live. So how does this work? What's going on with the spreads? What did they do that's different with the spreads? And, something you definitely may want to check out as a trader, because like I said, this is a new update to the Nasdaq spreads. And what did they change? Well, they used to tick in 1. Okay, so I got to update a couple settings right here. But they used to change in a tick size of 1. And so basically the Nasdaq had to move, okay? The Nasdaq literally had to move 4 ticks for it to move 1 tick. And people would get into it and they'd be like, hey, the Nasdaq just moved all these ticks and, I didn't make anything on it. Well, that's because of how the spread worked. It was very low leverage. And people would come in, they'd think they were getting hosed. They're like, man, I just saw the Nasdaq move like 4 points and I'm up like $1 on my bid offer, and this just makes no sense to me. Why is this, working the way it's working? And so understand we do have to do some, upgrades on here on our proximity and all that on Nasdaq, because this just came out live this week. So please pardon us on this side of the scanner as we get that fixed for you. But what they've done is now they tick in 0.1, just like the S&P does. The S&P, it ticks in quarters on ES, but on Nadex it ticks in 0.25 or 0.1. Well, now the Nasdaq ticks in 0.1, and so what does that mean for you? Well, that means that it's going to move a lot faster now. Okay, so when Nasdaq moves, a tick, it's basically going to move a couple ticks. Okay, versus having to move 4 ticks before Nasdaq moves 1. And we can go in here and see. So now if I sold it, I can go and actually buy and sell with every dime, okay, every 0.1 having the value of $1. And I'm going to put a message over here just so, let's see, tick size to 0.1 versus 1. So let's put a note there to the programmer so they can get that updated. They basically said no later than or no earlier than a date, but they didn't tell us the exact date. So anyways, we'll get this all worked out. But 43.85 to 43.95 now is 100 ticks. So it's not 10 because it's basically add a 0.0 to the end of each one of these numbers, okay? Or add a 0 to each one of these numbers. So now it's like risk 30, make, 61. Okay, just multiply the numbers times 10 until we get that wrapped up. And proximity, we're going to have to update the tick size. But anyway, so very, very cool. And so if you wanted to trade Nasdaq, but let's say you're a newer trader and $5 a tick was too much, or maybe you don't want to do $10 a tick by doing 2 contracts. Maybe you want to do $7 a tick for your risk management, or $8. Well, now you can trade them fractionally. So pretty pumped about this. And we'll talk more about that when you get back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. And so just looking at a few different things today and where the market's at and how we can take advantage of it. But talking about the Nasdaq 100 on Nadex, moving from a 1 to a 0.1, and tight bid-offer spreads, like 1 or 2 ticks. Remember, they're ticking in 0.1. So at 1 tick, you literally, it's versus 0.25 that you're paying right now on the CME. You're actually getting better bid-offer spreads, like as little as literally less than half. Just to show you a live ticket example right here. Look at that. 1 tick wide bid offer spreads. So that is a beautiful thing. So I've been so hesitant on trading Nasdaq on Nadex just due to how they were ticking, and so now I'm all over that. We have to start checking that out, seeing if we can get some nice trades going there. Okay. Let's see here. What do we got going on? With that out of the way, so hopefully you understand that basically it ticks in 0.1, that every tick is $1. That means a point, 10 dimes, $1, right? Being worth $1 there would be $10 in a 1-point move. And therefore, if you make $10 in a 1-point move, that's, you know, and in NASDAQ, it's a ticks in a quarter at a value of $5 or $20. So basically 2 Nadex spreads would equal, okay? So just 2 Nadex spreads would equal 1 Nasdaq future. Not too bad, which would put you like a 360 round turn, probably tighter than what most of you are paying in commissions to trade Nasdaq right now. Okay, so that's pretty sweet. And with a right now tighter bid offer spread on top of it. So, I'm seeing 1, I'm seeing 2 ticks, fluctuating a little bit right there, but that's that's perfect. So it's like they got it right, they keep it that way, right? Let's see some questions that have come up recently to me from some different traders about grains, like what grains do I trade or not trade? Obviously I like trading wheat. I like trading corn, but corn's real fast, so you better be very nimble, disciplined, and know what you're doing, or else you would have traded on Nadex. Obviously soybeans very popular, soybean, oil, soybean meal, stuff like that. I tend to stay away from things like cocoa and sugar and milk and OJ. The liquidity is just way too low, and it can move way too fast, and you can't get out of the trade if the liquidity is not there. It's just very dangerous. I don't trade lumber, things like that. I've played with some stuff, but very rarely do I touch any of those markets. I do trade, some, pork bellies now and then. I may trade some, feeder cattle. But that's about as deep as I go on the ag side. Just, you got to look at the liquidity, make sure it's there, hop on the CME's website, look at it. And sometimes people look at these like, man, they're so smooth in how they move. Yeah, there's barely anything moving them. So if you hop in and start playing, you're playing. A lot of those are being used by actual hedgers, meaning those who are buying or selling in order to hedge their cost of delivery. Or to hedge their ability to lock in on their crop that's coming out. So things like that. So you just really need to understand what it is. You're getting into a whole different thing. You want to start watching ag reports. You want to understand what the pit hours are. So a lot of them have a lot less hours available for trading than what you may be used to. So, but again, large companies may be going in and doing hedges on a lot of these markets. So you really need to know about the crop reports, because if you don't know about those, they can really kick you in the teeth. So they're very focused markets, and you really want to be specialized in those markets. So I just wanted to answer a question that came in about, what kind of, ag markets do I trade? Let's see here. So a couple articles came in. Let's see. But let's see here. I'll come back to that one. I got to read through that a little bit more. There's some stuff coming back up about the Swiss franc. So spreads compared to futures. So we've been talking about Nasdaq and all that stuff. You really want to know what the ratios are. Okay, it's a very important thing. So that way, if you're trying to compare apples to apples, you can see like how many spreads does it take, to equalize one. It used to be 20 spreads on Nasdaq. Now it's 2. Okay. The Dow is 5 spreads equal 1 future. The S&P, 5 spreads equal 1 future, and the small caps 10 spreads equal 1 future. Because basically everything's ticking in either 1 or 0.1, and so basically over a 1 point move, how many spreads would you need to equal the same value as a 1 point move in that underlying market? So we have that info on the scanner. You can click any market, and it'll be put in there for you. Okay. And what I do is I like to use, really tight proximity when I'm doing a trade. I want the market to be very close to my bid offer. So I'll go up here and, sort of at a high side, I'll put 0.10. And when I put 0.10, I'm usually minus 10 and plus 10. I'm usually doing that for one main purpose, because I want to, I understand that some things that tick like faster, like Nasdaq or S&P or, corn or soybeans or whatever, when I'm looking at those, 10 only means like 1 point. Okay, so it may not be as far away as big of a value. Okay, but I want to find those nice tight spreads. 2-3 ticks, obviously. 5 or less is my ideal number that I'm looking for, and we're even finding those on the S&P. I also go up here and I put in a 0.4 for my minimum reward risk ratio. Why is that? Because I want ones that have some room to move. Spreads actually they're an option, and to make it as simple as I can, the middle 40% of the width. So let's say if we're looking down here at the Dow and it's 100 points, like that middle 40% is going to move faster than when it gets to the top 30 or bottom 30%. Your delta is going to be closer to 1, but when you start getting, like in the top 30 points or bottom 30 points of that spread, then it's going to start slowing down until eventually it's like at a 0.5, whenever it gets to the floor or ceiling itself. And so if I'm using futures to mirror, if I'm using spreads to mirror futures, I want to use a spread that's going to be near the middle, okay? I want to use one that's very close in proximity to the market. And here's the big piece. Remember that 40% I said it moves fastest, okay? Well, if I get a wider spread, then my 40% number becomes bigger, okay? So I'm more likely to go in and grab, like one of these trades right here than I am to grab these two. They may be lower max risk, but they're going to move faster. I'm going to make more. Like let's say we do get a 40-point move, 50-point move. I'm going to make that 40 or 50 points on one of these wider spreads. I'm only going to make maybe 30 or 25 of that if I get one of these narrower spreads. And also I like to choose the end of day, which is going to be the wider spreads. By choosing the markets that are expiring at the end of the day, I'm then able to go in and take advantage of basically not having to worry about, is it going to expire? Did it move fast enough? How fast did it move? And people sometimes look at these and they get a little freaked out because all the money they're having to put up. Okay? But I mean, you're probably putting up $500 at least if you trade the Dow anyway. So I mean, if you did 5 of those, you'd be pretty much right on target, being right in that middle 40%. One of these. But the big thing is, you don't have to hold the thing till expiration. Okay? If it moves $40 against you or whatever, get out of the trade. Just like you would in a future. I mean, a future has, risk all the way down to 0 or up to, theoretically infinity, right? So you just exit. It's okay to exit. And yeah, I mean, I love the idea of not having to use a stop loss at all, but that comes at a cost. If there's quite a bit of time to expiration, the cost being that it's going to move slow. So do I want one that moves fast or one that moves slow? And if I'm okay with slow, well, then fine. Then I may grab that slow one, but I might grab 2, 3, 4, 5 of them versus just grabbing one of them and still taking on maybe that $50 risk, okay, and no stop. So then if it moves slow, as it speeds up, my delta gets bigger. I make more and more and more in the process, and it works out a little bit cleaner for me. So like this would be an example. If you thought the market was going to go down, you could choose that contract, and pop right up in there. Barely is even meeting our qualification. But so because it's right on that proximity, you got basically 10 points of movement before you're really making, much money before it really goes past a 0.5. But if you want simple spreads made easy, okay, then what you want is a spread that is trading close to proximity, is at the end of day expiration, and is wide and somewhere near the center, okay? A little below the center, a little above the center, but somewhere near the center, because the closer you get to that 30% number, okay? So if you're down at the bottom 100 points or top 100, 20 whatever points would be, let's see, 400, 30% would be 150. So if you're in the bottom 150, it's going to start going slower. If you're in the top 150, it's going to go slower. If you're in the middle there, then it's going to go to 150, a little bit less than that. But basically, if you're in the middle, about 130, 140, anywhere in there, that's when it's going to go a lot faster. So that's how I trade them most of the time if I'm trading it directionally. Now, if I have some just big move I'm banking on, I may choose a further out one, but that's usually how I'm trading them. Now, people will come to me and they're like, well, but the market moved 10 ticks and I only made $10 on the trade. If I would have been in I would have made $100 on a future. Well, buy 10 contracts. Okay? It's pretty simple. I mean, you could just equalize the tick ratio there. Well, what if I did a binary, man? 10 ticks out of the money for $10. If I would have got that, I would have made $90. Very true. But if it just expired 1/10 of a tick, not just a tick, but 1/10 of a tick out of the money, you lost on the trade. Okay? And you can make more. So versus, I mean, you go in and let's say at $10, the most you can make is 90. You can make $100, $200, $300, $400 on a spread. Okay, so there was a lot more profit potential, and you can still define that risk. Most people risk $20, $30, $40 easy on a binary all the time, and it comes down to a tick. So yes, the market doesn't have to move much for you to make a lot, but also the market doesn't have to move much for you to lose everything you put up. So this really allows you to control your risk management. I traded spreads for 9 months before I ever touched a binary, and I love binaries. I trade binaries. They're a little more advanced, just understanding what delta is and what gamma is and the speed. And not that you have to understand Greeks completely, but you got to understand how they move. And, people like that action and that speed of binary, so I completely get that. But I just wanted to, highlight the spreads and say this is something definitely worth, checking out. It's something that I think a lot of traders that like futures and forks would be better off starting with. So, because they go in there and they're going with that high leverage and they don't have good risk management, and it can just really hurt. And it lets you go live, and that could be a step on futures. You could go from futures demo to maybe like middle spreads like I'm talking about live at $1 a tick, and then move up as you have success, and then eventually you're, into the futures market, okay? Or you may just find you like spread so much, you just end up trading the same spread most of the day, long and short, and that's all you need. So, anyways, but, definitely check that out. And a lot of traders are coming on Nadex on binaries. We all want that action, but, man, if you want simplicity, okay, you want to get in there, just learn how to trade simplicity, and you hate losing by a tick, and that's just pissing you off over and over again. You want to start trading some trends. Hop in there, get the spread, choose the end-of-day spread, choose the one with close proximity that's wide, and that's right there in that middle 40%, so that way you can really take advantage of trading like you're trading futures or forex, but without the uncapped risk, without your margin chain, because you got to put margin, and then you also got to put up any kind of drawdown. On spreads, your risk, that's it. Your risk and your margin are one and the same. It never grows, okay? Now, your max risk would mean it'd have to move like 151 ticks against you, and this, like in one of these contracts, 300 ticks against you on the other one. Don't let it go that far, okay? Have a stop loss just like you would if you're trading futures, okay? And just get out if it moves against you, okay? It would be a lot wiser in the risk management model for a lot of traders to be doing that. Such as one of the things that I've taught my risk management formula is 5% divided by 6 rule, and that's basically going in what's your account size. Now, you may not be able to start out with this, but you shouldn't grow your size until you can hit this, is what is 5% of my account size? Divide that number by 6. That's the number to risk per, trade. Doesn't mean you're going to lose that much, because you may lose less. You may make some. You may make a lot, whatever. But, don't risk more than that per trade. So that may mean you need to go down to a different tick size. So instead of having 20 or 50 or $32 a tick or $12.50 a tick or whatever, maybe better off with $1 or maybe $2 or $3 a tick by doing 2 or 3 spreads. Remember, it's only $1 a tick, but you can do more than one at a time. But it may really be the answer for a lot of you for learning how to follow that 5% rule and help you trade longer and stay in the game longer and last with that mentality of where do I want to be in 12 months versus just 12 days. All right, stay there. We'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And like I said, we're just going through, spreads and some of the benefits of those spreads. And like I said, talking about it a while, but I mean, literally just 2 spreads to mirror the market. And, if you haven't checked them out and maybe just, I don't know about these binaries, or the binaries haven't been working out for you, or, there are so many cool ways to trade these things. I mean, you can do straddles and you can do condors, and you can use them as hedging on futures. That's a big one. I use the shorter term ones for that. But also you can go in and, it's pretty simple. You can just go in there and take advantage of them as a way to trade and fractionalize your risk, because you basically have to compound it when you use a future. You can't do really less than one S&P, right? You can $50 a point. So you have to go to $100 a point. You can't go to $60 a point or $70 a point or $80 a point. And so it actually lets you fractionalize your increase in your risk, or decrease, whichever way you want to go, to better match, whatever your risk management model is. Like mine, 5% divided by 6. I can go in, I may do an S&P, and I may do a couple spreads, that type of thing, to help you control that risk, a lot cleaner, a lot easier to do it. So you can trade with the spreads. You can use various spreads. If you're going to scalp a trade with them, okay, this is important. You need ones with really tight bid offers, okay? So, because you don't want to be giving up too much. But I mean, things like, like we just looked at Nasdaq, right? Gold is another great example. And, of course, you need them to be as close as possible to at the money. Very, very important. You want that tightest number you can get on the proximity. If there's a 2 or a 3, you want the 3, okay? Just because it'll move just a little bit faster, okay? A fractional, tick faster, but it adds up when you're scalping. So make sure you have really tight bid offers. Make sure that you go in and you find really small proximities, wide end-of-day spreads. Those are the ones that you could look at for scalping, okay? Let's see here. Let's do a quick calendar review of what is coming up. And I know we don't have a lot of time, but I'll cover what I can with you, okay? Let's see. What do we got here for tomorrow? I'm going to focus on, we got a couple trades happening. We do have, looks like tonight, we got our pound trade balance report, usually about a 30 pip move. So we go 30 pip iron condor, buying the lower spread, selling the upper spread. We got our Frank CPI, that's all about a 25 pip move. So we're in for an 11 p.m. for a 7 a.m. expiration on both of those. About a 25 pip move on the Frank CPI. And IV has just been through the roof, by the way, on pound right now. You're able to get some insane stuff on pound and euro pound. So definitely something to check out over there. And then we got unemployment NFP coming on out tomorrow. And just to give you, ideas of ranges, go through as many of these as we can. Now, I may condor these. I may strangle these or straddle these. I just got to look and see what it is, okay? So I'm really going to pay attention to what the pricing is before choosing which one I want to do. Aussie dollar, usually you got about 50 pips of movement, okay? Euro dollar, now 50 pips, basically it comes back in. So usually it moves about 60, looking for about 50. Euro dollar usually moves about 100, you're looking for about 60. That pop up and back down. Pound dollar usually moves about 100 pips, so you're looking for about 70 minimum profit. Again, up and back down. These are all straddle based, meaning they're not straddle, but iron condor based. Dollar CAD, about 75, moving 60. Well, that is the time we have for today. I hope you'll have a fantastic weekend, and I will see you next week.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.